Are you thinking about buying a new home and wondering what to do with your current one? Renting it out might be a smart financial move, but it comes with its own set of challenges and opportunities. As of March, the average rents for 1- and 2-bedroom homes in the U.S. are $1,487 and $1,847 respectively. But prices vary widely across the country. In places like New York City and San Francisco, rents soar above $2,900, whereas cities like Wichita and Akron offer much more affordable options under $800. Becoming a landlord means you'll start generating rental income, which must be reported on your tax returns. But the good news? You can claim deductions for utilities, repairs, and even depreciate the value of the home over time. However, it's not all smooth sailing. The passive activity loss rules could limit your ability to deduct expenses that exceed your rental income, unless your adjusted gross income is under $100,000 and you meet other criteria. There are also potential pitfalls. Renting out your home for extended periods can affect your ability to claim the principal residence tax exclusion when you sell. Up to $500,000 tax-free profit for married couples might be at risk. Depreciation in periods of non-qualified use could further complicate your tax situation, leading to possible taxes on gains even if you haven't exceeded the exclusion limits. And what if you need to sell at a loss? The tax treatment depends heavily on whether your home was truly converted into an income-producing property. A temporary dip in market value might not qualify. Turning your home into a rental property is a big decision with financial, tax, and personal implications. It's important to get expert advice tailored to your unique situation. We're here to help you make the best choice for your future. Thanks for watching.